It's good to be here once again. My name is Emmanuel Odogwu. I'm reaching you from the beautiful city of Port Harcourt. And of course, this is your one and only Rally Trade morning market review. So, sir, this is the session we get to analyze the market for you, give you tips and tricks on how to navigate the market profitably, and of course, how to come out as a good trader that always follow his or her rules. Okay. All right, then. I think we're starting immediately. I want to believe you guys can hear me, so just go straight to the crux of the matter. All right, then. There has been a lot happening in the global scene, so let's talk about it briefly. Just like what we always do, we try to look at fundamental analysis first, right? That is the news events that keep on rocking the global financial market, and then after that, we'll now dive straight into our technical analysis. I want to believe you guys can hear me. So if you can hear me, just type "I can hear you" at the chat room there. Just type "I can hear you." Just 1 or 2%, and that will serve. Thank you very much. I can see you. All right then. All right, let's start from fundamental analysis. There's been a lot happening between Israel and Hamas, and of course, that has been shaking the market. So the market has been able to move gradually moving from the risks on to, of course, the risks off, right? So where the market will start doing almost opposite of what it was doing before, right? Oil price will shake, gold will shake, most of the currencies, most of the commodity currencies will also shake, like the CAD, the CHF. So guys, this is the time you want to stay close to your chart, monitor your trade, always have stop loss, and of course, take profit on your trade. Very important. So let me start with Forex Factory and of course some other fundamental news websites. So let me share my screen. All right, let me share my screen. So please indicate if you can see my shared screen. I've just shared my screen and now we are all viewing forexfactory.com. So just type FF at the chat box. If you can see this particular screen, FF, that means Forex Factory. Okay, guys, you can see it, right? So this is one of the fundamental websites, but guess what? You should not be armed with only one fundamental website, right? There are several of them. So you can also use investing.com, you can use FX Street, you can use several of them. You can also use trading economics, right? So this is trading economics. So you can use all of these several different fundamental websites, right? All right then. Now, but the traditional one is the Forex Factor. So let's just stay there. Now, for the purpose of those joining us for the first time, because we always have newbies, right? New traders coming on board, which is very nice and good. So the way you get to this website, you just go to your browser and then just type www.forexfactory.com. Forex, foreign exchange, not the for forex like a bush, okay? Forex. Okay. Now, once you open this website, it shows you the news activity for that particular day. One of the reasons why we like to use this website because it doesn't have too much adverts, okay, running all over the place. So we just have the calendar. So this is the calendar. So it shows you the activity for that particular day, right? Now, of course, you may want to view the news for the whole of that month. So you may just, or the whole of that week. So you may just want to click this word calendar up here. So I've done that. Just click calendar, it opens up. So quickly, this is the date of the news. This is the time of the date news will be released. This is the currency the news will affect. I'm doing this for those just joining us so that, of course, you also get value. This is the currency the news will affect, right? So you're expecting to see currency pair. You not see currency pair, you see currency, right? And of course, that particular news will now affect the pair, right? Now, of course, this is the impact. So all of these yellow are low impact news. The red is the one we'll try to focus more on the high impact news. For today being Tuesday, the 17th of October, blessed day of the Lord. So this is the news for today, right? So this is the caption of the news. You want to call them the news headline, right, or the headings, and this is the data part of the news that tells you whether the news comes out positive or negative, right? Whether the news favors the economy or did not favors the economy means there will be an increase in the demand of the currency of that economy. So that is why we buy. The other way around, there will be a decrease in the demand. So that is why we sell or we dump, right? So for today, I think this particular news has already come out. Average hourly earnings or average earnings in the UK, right? That came out as a negative value. Yeah. Okay, that's for the GDP. Then of course, the news we're expecting very well that we expect to shake the market is inflation news from Canada, right? And that is what we call CPI, Consumer Price Index. Guys, this is simply inflation, okay? So on another website, you see it as inflation, right? News on inflation, inflation creeping into the economy. So this is Consumer Price Index, which measures the changes in the price of goods and services as purchased by the consumer. So it measures that changes that comes into household commodities. Okay, so this is the actual we're expecting. Guess what, sir? This news is by 1:30 p.m. So that means you are not to trade the news now. There is no trigger. I mean, there is no actual for you to start trading. That's what I mean. So you cannot pull any trigger, guys. So you may want to wait till 1:30. Please keep your eye on card by 1:30. So if you already have a trade on card, then of course that trade should have stop loss and of course take profits. But if you don't have a trade, guess what? You can now trade it. You should trade. Even if you have a trade, you can still trade. So generally, if the actual comes out good, I mean, if the number you will see here by 1:30 p.m. Nigerian time, if it comes out as green, then you want to do a buy on card, right? Now, I mean, buy the currency. I didn't mention currency pair. Say currency. You buy the card. So if it comes out, if the number comes out as red, you want to sell. So how do you buy card quickly on any currency pair that has card as a base currency like card JPY? So you want to do a buy, right? If the actual here comes out as green. So this is like explaining fundamental to you guys, okay? This is like explaining fundamental to you guys to the newbies. So I hope the newbies are getting value, okay? But of course, if card is the quoting currency, you want to do the opposite, then you want to sell if the news comes out as green. So that's just how we trade it. Then of course, still today we have the retail sales by 1:30 again from the US, right? So this measures the total amount of sales, right, at the retail level. So if that value is increasing, of course, it means if the actual is greater than the forecast, that's what it means. It means the dollar will be impacted positively. Okay, they want to do a buy on the dollar, right? So that's just how we trade it. Very simple. So these are just the two news we're expecting for this afternoon, right? Then of course later in the night we have the non-data news. So this website is divided into two categories of news: data news and non-data news. Now that's my own categorization. Okay, data news and non-data news. So data news are these ones that have numbers, right? Then non-data news, you will not see any numbers, so they are just speeches, right, from heads of central banks and of course governors, president, all of that. So the RBA, that is the Reserve Bank of Australia, their central bank governor there, Governor Bullock. Boo, that sounds like the market will go bullish. Speaks. Governor Bullock speaks. So that means the AUD will be impacted by 11:35 p.m. Oh, that's almost midnight, guys. Remember the code. You have stop loss and take profit on all your trade on AUD. So we have news on Wednesday. Say CPI again from the UK. Okay, this CPI normally comes out within the mid month, right? Mid month, 15, 16, 17. You get to see CPI from several strong nations. Okay, so this news you trade them once for a particular economy once a month, right? So you want to keep an eye on them. I want to believe we are getting value. So this is the point I will now switch over to my chart for technical analysis. But before that, guys, I hope you guys have taken, some of you took advantage of the of the Israel Hamas war, right? We are not prophet of doom, but whatever is happening in the global space, we get to trade it, right? We get to trade it. Of course, you know what we call safe haven, right? Safe haven. So it means whenever there is crisis anywhere in the world, right, major crisis, investors will get to pull out funds from those areas, right? Where they will lose. They will pull out their funds where they will lose. And of course, the next destination will be on gold, or if you like, the precious metal, like what happened during COVID, right? So that means during this period, there will be massive demand. There will be massive demand for precious metal, right? For store of value, right? For store of value, right? So that means there will be a massive demand. So we saw gold price pushing up last week, right? And of course, on Thursday, we saw a dip into the price of gold just because of the news on the on USD. Of course, that would be that's an opportunity for you to even buy more because it has deep. Okay, so if you look at on Thursday last week, you saw that gold price deep. In fact, that was the only day it closed last week. It closed bearish. So that's an opportunity for a discount. I want to believe you place a buy there. Then of course on Friday, it skyrocketed. So, just following the news between Israel and of course Hamas, you can make a lot of money. You can make a lot of profits from that news, right? So there are several websites where you can follow up that news. You can do that on Reuters. You can, guys, are we still here? So you can do that on Reuters, and you can do that on several other websites. Okay. So, of course, the United States president is set to visit Israel. That's tomorrow, and of course, that will be for a peace-keeping mission, right? But then, of course, you know the U.S. are strongly backing Israel. So, whatever that outcome would be, just keep a close eye on it. Keep an open eye on it, rather, so that you can tell the direction the market will go, right? So, currency pair or currencies like the CHF, commodity currency like the CHF, the CAR, the AUD, those currencies normally do well during crisis period like this. Okay, of course, CHF 75% CHF 75% of the gold in the world normally goes to the gold, the Swiss gold refinery. Okay, and of course, 25% of their reserve are in gold. So that currency, the CHF, normally do very well. Whenever gold price is also doing very well. So gold is doing very well. Gold will do very well in crisis. Take note. So that means CHF will also do very well. And of course, you know, it's happening in the Middle East. It will also affect card, right? It will also affect card. So, guys, these are the information you need to bear in mind. Of course. Now, let me switch over my chart. Let me switch my screen rather to my chart. Uh, so, I'm trying to share my screen right now. Guys, indicate if you can see my screen. Please go to the chat room and you just type chat if you can see my chat. Someone should just type chat if you can see my chat. Let me be sure I'm opening here. Thank you. So you can tell that the USD index is still very much bullish. So we like to start from USD index because such that it will cover up for most of the USD pair that we do trade, right? So this chart is still very bullish, right? Still very bullish. The reason is because on the H4 time frame. Now, this H4 time frame is good for those of us doing swing trading, right? So holding a trade for a longer time, okay? Then of course, after this H4 time frame, I normally go down to H1 time frame and of course 30 minutes or 15 minutes time frame. Okay, that will serve for those of us doing scalping and of course intraday trading. Okay, so if you're a day trader, of course majority of my clients are day traders, so you may want to also look at what the big money direction is. Okay, so that immediately you move down to a lower time frame, you can now take your trade in that direction. We call it directional bias, right? So you want to be biased about the direction. Okay, I mean you want to follow the direction of the big money. So you want to follow the direction of the big money, okay? So from what we're seeing here, this is still bullish. Why do we call it bullish? We call it bullish because following up this is a high, right? This is an impulsive leg that broke this high. Okay, please, this kind of analysis is called uh, market structure analysis. Okay, so after that it formed a low, of course. Then of course this is the new low that actually broke this high. We call it break of structure to the upside. Okay, then of course it started going downward. So actually this movement downward, this impulsive leg downward, did not actually take out this low, right? So rather it gave us relatively equal lows. Okay, so this impulsive leg did not actually take out this low. So if this leg had taken out this low, okay, right, it means we have now shifted to the downside. But guess what? Okay, these are the things you need to look at for. Let's say you have a negative trade, right? A trade that is running negative. So the most of the question most traders normally ask this question: Emmanuel, should I close my trade? Should I, or I should still wait? So these are some of the analysis you want to do. You know, you do analysis to enter a trade, you do analysis to stay on the trade. Then also you do analysis whether you are to close the trade or not, whether the trade is on profit or on a negative. So if a trade is on negative, all right, so these are some of the analysis you can do. So you can say you can do this mechanical trading here. Say I will not close my trade until this low is taken out. Guess what? That low was not taken out. Rather, the market traded towards this low and of course pumped to the upside. So because of the market did not take out this low, right? So we still have our argument that the market, that USD index on the H4 time frame peak note is still very much bullish. So if it's still very much bullish, it means on the long run, this high here, the high above this space or above this high is our target liquidity. By target liquidity, I mean that is where the market should be targeting to move towards. So we hope that we forecast that the market will trade something like this and take out this high. Okay, so of course fundamentals can push it towards that level. You know, if this crisis that is going on should continue, you will expect that there will be more demand for the dollar, right? Of course, you know, dollar is the global currency, okay? And of course, the currency for international trade. So if crisis should continue, of course, you know, there will be high demand for it, okay? So, of course, so this is the projection, right? But guess what? It's not just run through like this. There has to be some internal dribblings, what I call internal structure towards that level. Okay, so that means on the H4 time frame, USD index is still very much bullish. Okay, now then let me drop to Euro USD very fast. So on Euro USD here, let's do some analysis here, and of course I'll give you some entries here. Okay, I'll give you some entries here. So I was already doing some analysis here, as you can see my screen, right? Okay, so quickly, this is excuse me. So before this particular move here, you can see that this instrument has been nosediving, right? So that's what we call a downward trend. Okay, breaking structures towards the downside, right? It's showing you the direction that the market is going down. Until we saw this high, of course, look at this, please. The market moved up like this, created this high, and of course nosedive and took out this low. Okay, that's still showing downward momentum. So we saw that gradually the market went through this internal structure, got to this point, don't take out this high. So this is the first time the market took out this high. Okay, so that's a shift to the upside. Okay, for the market taking out this high is a shift to the upside. So that means Euro USD have shifted on the H4 time frame. But guess what? That shift simply means it has tapped the liquidity above this high. Okay, that protected liquidity has become the target liquidity. So the market have taken this liquidity up here. We call it external liquidity because it's at the external side. So look at inside here, all of these internal dribblings. We call them internal liquidity. So very simple. All of the highs and lows, the spaces above the highs and lows are what I call liquidity, so that it not sound very high to you. Okay, so since the market have taken out the liquidity above this high, guess what? My projections would be, if it has taken this other liquidity, it will target the one below. Okay, target the one below, target the one below. Okay, but before going up, you notice it took out this low, right? It formed a low here. That we call that internal liquidity, right? It formed a double low here. This is a low, this is a low, right? So look at this carefully. Okay, the market nosedive to this point, right? Then of course went up, creating a liquidity here, and quickly came back very fast to take it out. Okay, okay, so that's taking out this relatively equal lows. Okay, so my position would be that this market would trade into this area, would trade up a bit, right? So you can see this arrow point drawing, this you can see this arrow drawing, right? That points upward. So the market will trade up, because that is what it's doing. You trade up, then from there to nosedive. Okay. So since it has taken out the liquidity above this side, so my next target would be for it to drive towards the low here. Okay. So of course there is a lot of areas that it can grab here. So there is one here, there is a low here, there's also a low here. Okay, so if this market take out this low, so that means we're still going downward. All right then, so let me be precise with my entries here. So I want to believe you are understanding what I'm doing, what I'm saying. So let me be precise with my entries here. So I do a Fibonacci from this high to this low. Okay, so I'm expecting a movement to trade into this area. I'm expecting the price to trade into this area, then before the dump. Guess what? It may not even trade into that area before the dump, right? Okay. Of course, so look at my fib. I have 50%. It has not actually touched 50%. If the market touched 50% or above 50%, we regard that as a premium price. Okay, so that alone will attract a lot of sellers into the market. But the market has not done that. So for now, on the H4 time frame, fingers are crossed. So I will drop down to a lower time frame, H1 time frame. So let's look for more entries here, right? So on this H1 time frame, guys, I will want to do a sell, right? I want to do a sell. I want to do a sell. So I want to sell if the market trades up into this area. So let me adjust this my arrow. So if the market trade up into this area, then before I would like to do a sell. So somebody say, Emmanuel, but why not just buy up? Then of course buy up so that you can sell down. You can do that to buy up so that you can sell down. So if you have to buy up, so let me give you a signal for that. Um, so you can only do a buy here if the price should trade above this local resistance here. Okay, so buy will be in the sage, right? Buy will be in the sage. My choice signal is a sell, but we can take it up from there. Okay, buy will be envisaged only at this level 1.05685. Guys, are we following? 1.05685. Buy will be envisaged at 1.056. So around this area, so the price should just trade a little bit above this. If the price trade above this local resistance here, right? I mean resistance from a lower time frame, right? Local, I mean very close to the price. So if the price trade around this area, then you want to do a buy. Of course, your take profit would be inside this area. So your take profit would be maybe 1.06001. But guess what? Now take note on Euro USD. Once the price trade up into this area, remember I'm expecting a dump, right? I'm expecting a dump. Don't forget this. Guys, this is a Zoom meeting. Okay, so we are also streaming this live on YouTube. Okay, so any of this you miss, or maybe you want to hear again, remember this kind of teaching comes by hearing and hearing and hearing. So that means if you want to hear this again or watch this again, you can just go straight to Rally Trade on Zoom. Okay, just type rally trade on YouTube rather. Just type rally trade on YouTube. Of course, you can watch this after now. Okay. So those of us just joining us, this is Emmanuel Odogwu reaching you from the beautiful city of Port Harcourt. And of course, this is our morning market review where we will try to review the market, give you tips and tricks on how to navigate the market, and that is what we're doing right now. So for Euro USD, we're expecting a movement to the upside, and from there it should dump, right? Now the reason why it should dump, I've already given you that. So this market move towards areas where we have liquidity. So we're expecting it to trade downward to grab all the liquidity at the lower side. So as for Euro USD, let me jump to GBP USD very fast. So on GBP USD, take note, the crisis in Israel and Hamas will be affecting the market. We mentioned that earlier. And of course, we said it will make it stronger. So on GBP USD, guys, I think I was able to draw all of this internal structure here. So very much the same on GBP USD, right? So drawing my Fibonacci, right, from the high, the recent high, right, to the low, you can see that this market has dumped this much to zero, and of course it's trying to retrace. So usually I like to see the market to retrace, okay, just above my 50% golden ratio, okay, just above the 50%. Then I would like to do a sell there. So I would like to sell. Okay, let me drop to 1 hour time frame and give you some entries there. So same thing for this instrument, right? GBP USD is neighbor to Euro USD, okay? They see the same thing. So same thing, I would like this instrument to trade up into this area, right? Then before I would like to do a sell from there point. A sell targeting this low to trade lower. So that means I would like to wait for this instrument to pump up, right? Now, guess what, sir? If this price is not pump up very well, and of course start moves diving. So once it trades below this local support here, then I'll be going in for a sell, right? So once it trades below this local support here, I'll be going in for a sell. Otherwise, I'll wait. I'll wait for this market to gather enough momentum for a sell, right? And by that I mean for it to trade into this area or up here. Okay, so remember this area all up here is above this double relatively equal highs. Okay, let me remove some of this stuff because looking a bit clumsy. Okay, so once this trade a little bit into this area, then I would like to do a sell. So I would like to do a sell around this area 1.22540, 1.22540, right, to 1.22370. So anywhere here I would like to sell. Why? It's just above these relatively equal highs. Just above the relatively equal highs. Now, guys, remember what we always do. You can also check this for the scalpers in the room. You can always check this website we call Financial Visuals. So if you go to your browser and then you type www.finviz.com, www.finviz.com. Let me share my screen again. So I hope you can see the screen. If you go to your browser and type www.finviz.com, you get to see the 1-day relative performance on the dollar, right? So invariably it shows you the strength of the dollar compared with other currencies, right? So from what we are seeing right now, you can see that after AUD, now the currencies towards my left are the strong ones, the currencies on the right hand are the weak ones. So you can see where USD is positioned this morning, just before AUD, right? So that means USD is strong. So of course, that is what our analysis tells us, right? So this is like confirming what we just analyzed on the technical basis, and of course on the USD index, right? So this is USD being stronger. So that is why I keep saying on Euro USD, on GBP USD, I'm expecting a sell, right? A dump, right? Take note, guys. You can make a lot of money from trading that. I'm expecting a dump. Okay, let me pause a little and take this question. So please, I really don't know how this Fibonacci works. Okay, sir, you can learn that on. You can visit any of our office now and learn it, or you can even learn it online. Several places where you can learn it. So please, depending on the state you are joining from, so you can get to our office and of course request that they teach you. All right, guys. Let me look at more questions. So you're asking what of sell for Euro USD? I just mentioned. I just gave you where we are expecting the sell, right? Okay, okay. Sell entry for Euro USD. Okay, guys, this is sell entry for Euro USD. This area. So sell entry for Euro USD is from 1.1, 1.06, 1. Okay, let me share. The sell entry for Euro USD is around 1. Guys, 1.06055. Please, who is talking? Mute yourself. Okay, let me mute you guys. So 1.06055, right? Around that area to 1.05870. So anywhere around there, I would like to do a sell because I'm expecting, take note, we said we're expecting an impulse to the upside, right? So that will give it enough premium price for a dump to the downside, just like this arrow. Okay. Guys, so this is that's the entry. Of course, stop loss we have to be stop loss we have to be above this high. If this high is taken out, of course the bullish momentum continues. So stop loss will be above this high, 1.06440. And of course, if you're selling here, right, it gives you opportunity for a take profit as much as 1.04. You take profit of 1.04903. Okay, see, not just calling these prices for you that is the ultimate. The ultimate is I'm showing you how I'm getting it, right? So your stop losses and take profit has to be placed at the highs and the lows of the market, right? Highs and lows. Take note. For stop loss, you want to hide the stop loss or you want to push the stop loss above the high, right? Above the high. So you want to position the stop loss above the high for a sell, okay? Then of course the take profit, you want to position it above the low, all right? I mean the recent low. So you can your take profit can be here or your take profit can be down below the low we have on the H4 time frame. Now that's for Euro USD and GBP USD very fast. Now let's look at another currency pair. Let's do one on Euro CHF, right? Euro CHF. Now Euro CHF, CHF because oh God. CHF because I would like to look at what the CHF is doing because that currency is a commodity currency, right? So so that means it will do very well if the gold price is doing very well. So you can see how this instrument has been dumping or on a downward trend, right? Now this is one of the instruments that is known for range. It ranges a lot, right? But then that's because in time past the euro, the CHF was pegged to the euro. Okay, now excuse me. So I would like to trade here, right? I would like to trade here because I just draw my feed from this high to the low, okay? from this high to below. So I would like to do a sell. I would still like to dump this instrument, right? So it's actually trading upward to where I would like to dump it from. So if this price trade into just above my 61.8, so you can see that it's going up like this with this internal structure. So if you trade into this area, I would like to do a sell, right? So this will be the last currency pair I will analyze before I jump into commodities and of course indices. So if the price trade for USDA share, guys, if the price trade into any of this zone, I would like to do a sell. I hope you can see the zone very well, right? So anywhere around, if the price trade into anywhere around 0.95484 or 0.95297, so around this zone, it's actually a zone, sir. 0.954 0.95484 to 0.95280. So around this area, I would like to do it. So, but for now, I'll just wait. Okay. So I need more premium price so that I can sell. So guys, just call one currency pair you feel we should analyze again before I jump into commodities. So all of these analysis we are doing okay, you're asking if it's possible to turn your chat screen into landscape. Of course, just do the on your phone. Just go to rotation, right? Screen rotation on your phone. Then of course, turn your phone from portrait to landscape. Then your chart will turn. At USD JPY. Okay, let's just do USD JPY before we jump to gold. So USD JPY. Our USD JPY here. I was already doing some analysis on it. USD JPY has been very much bullish, right? Very much bullish. So as you can see. But this bullish movement, you can see because of the crisis, it has been stylishly in a range, right? Because JPY normally do very well whenever it comes to crisis period. So it's one of the safe haven destination. Okay, of course. So is USD too. So that's why you can see this in a range, right? So this is the upper band of the range, which the market has not broken above that area, right? And of course, you can tell that this is the lower band of the range. You can tell this is the lower band of the range, right? So this instrument is still ranging for now, right? But why is ranging on the H4 time frame? If I drop down to 30 minutes time frame, I can see precise direction so that we can take our trade for the day traders. So for the day traders, now you want to still do a buy on this instrument inside, right? Inside the range on the H4 time frame. So you want to wait until the price gets to this local support. So you can see this price has been bouncing off this local support for some time. So if the price trade into this local support, then I would like to do a buy because the demand on this support will be very high. So a buy will be envisaged. That will be a buy limiter. A buy will be envisaged if the price trade into 149.435, right? So anywhere inside this zone, 149.435, even down to 149.382. So anywhere inside here, I would like to do a buy. Of course, if you're buying there, your stop loss, your take profit, will have to be this high, right? Of course the high of the range, right? Then of course your stop loss of the high of the range is around the high of the range is around 149.836. 149.8. Of course, the stop loss we have to be just below the verified support. Your stop loss we have to be somewhere here, 149.233. Okay, I've honored your request on USJPY. Now let's move straight into commodities. So we're going to be looking at oil, right? Oil and of course gold. Oil and of course gold. So guys, oil price is one of the instruments Oil is one of the instruments that will do very well in this period, right? I hope you guys are taking advantage of it already, right? So after that issue that happened 2 weeks ago, that was on Friday, when the Hamas sent a bomb into Israel. So that happened during the week. That happened by the weekend, right? That was on Saturday. And of course, Monday breaking, we saw a gap up, right? We saw a gap up. So whenever you see gap up, guys, whenever you see gap up on your chart, it's an indication of pressure to that direction. So the gap can be a gap up or a gap down, right? So depending on the direction, if it's a gap up, it means there is pressure pushing the market to the upside. Don't forget that, please. These guys that are talking, right? Are they with us? Or let me mute. Let me mute, please. So so whenever you see gap up, right, it means now this gap can happen by the weekend or it can even happen during the weekdays. So that means you can sit before your chart, you're watching the market, and the market can just gap before your eyes. That one is always the best one, right? So if you see the market gap before your eyes, guys, you have to follow that direction. Is that is God blessing you very well for that day. Okay. So, but this one happened during the weekend, right? So gap up. So what actually happened is after this gap up, guys, what I did was I actually drew my Fibonacci. Very simple. So if the market gap up, of course, you draw from the low to the high. So that means you're drawing going up. So I actually do my fib right on that Monday. So this is what I did. So I'm teaching you this so that subsequently, if such thing happen, you want to do it by yourself. Okay, so the market gap up. So I do my fib, and usually I normally like the market to trade below 50%, preferably below 61.8 retracement. Of course, whenever there is a gap, the market normally trades back to cover that gap. The market can cover that gap 50% of the time, 61%, 61.8% of the time, or even completely. The market can cover that gap, right? So of course that is where Fibonacci comes in. So on Monday the market did not even move. Now the market retraced very well, but guess what? It retraced just into 38.2. It did not get to even 50%. So I missed this opportunity. Right now on Tuesday the market did not even retrace to that 61.8. Now guess what, sir? It was on Wednesday the market retraced, right? So one thing this market always do is that this market always use our lack of patience, right, to hunt us down. So you know what you're doing, right? You're doing the right thing, but the market will not serve you that at that time. So you can see it was even on Wednesday that the market had to give us the 61.8 retracement. Come on, guys. So this would have been the best time, right? But then by that time I was no longer on this chart. So this will be the best time to dive in. So lack of patience is also one of the challenges traders we also have. Okay. Now, but guess what, sir? I'm already on that trade, right? As you can see. Excuse me. I still later took the trade, right? I still later took the trade, of course. And of course I've adjusted my stop loss. So this is like a risk-free trade. Come on, guys. One of the best way to trade is a risk-free trade. Why? In which once you're already in profit, what you do is you adjust your stop loss. You take it from the risk zone into the profit zone. If you do that, then that particular trade is called a risk-free trade. So that means no matter what happens, even when the devil decides to become more wicked, your market will never ever close in loss. Rather, as this market keep going up, of course, you make more profit. So I'm expecting this market to trade up even more so that the profit can increase further. Of course, you can see I'm having a golden cross here, right? So that's the sign of a bullish signal, okay? So of course, this price is only bouncing off this level here. Excuse me. So I'm still very much bullish, guys. I'm still very much bullish, except the meeting between the Israel Prime Minister, that's the Benjamin Netanyahu, and of course Biden. Of course, that's except the Israel decide to maybe ceasefire, right? Then that is when this instrument will not dive. But guess what? If the whole thing continue like what Israel have said, then of course this instrument will still keep trading to the upside. So you want to keep a finger crossed, okay? Follow up the news, but I'm already on a buy on this instrument. I'm already on a buy. So if you go down to a lower time frame, you might want to wait for the price to get again to a support. If you want to join me on this buy, you want to wait for the price to get to a support, right, before you can enter the buy, right? So these are areas, if you want to buy again, these are areas you should enter the buy from, right? So these areas I've pointed out, right? So either around 89 point, so either around 89.34 or even around 88.90. So if the price retraces into these areas, then you want to join me.
Recording in progress.
So 89.34 cents or even 88.90 cents. So any of these areas, you want to enter a buy on oil. Then of course, let's look at gold, right? Gold, another instrument that will do very well in this period, right? Another instrument that will do very well in this period, okay? Excuse me. So same thing on gold, guys. Gold will be very much bullish during this period. I want to believe you will take some profit from it. So look at this other. Okay, you're asking TP on oil. Okay, let me go back to oil. So if you're buying oil, now take note, stop loss and take profit are very simple things that you can come up by yourself, right? They are very simple. Why? Because we normally look at the highs and the lows, right? So if you're entering anywhere here, your stop loss will have to be either if you're entering at this $89 30 something cents, or you are entering here $88.90. So your stop loss will have to be just below this low, and of course your take profit will have to be before the high, right? Of course, you know, the next target liquidity will have to be above the high. Okay, so before it gets above the high, it must have taken your trade out in profits. Okay, so take profit will have to be 91.25 cents, and of course your stop loss will have to be 88.46 cents. Okay, but guess what? If you're waiting for that, for the price to trade into this 88.90 cents here, of course, it means you're going to have a very tight stop loss, which is very good, right? A very tight stop loss. And of course, this will give you a good risk to return ratio. All right, now on gold, right? On gold, now a lot has been gold has been trading to the upside, right? Same thing on gold. Same thing happened to oil, happened to gold after the gap up. Now, if you watch this gold very well, gold did not even bother to do any retracement. That shows you that the momentum is very strong, guys. Now, this is that bearish movement that happened on Thursday. I was telling you of that gave us more opportunity, right? More opportunity for a buy because it has given us more discounts. Let me go to H1. So last week, last week Thursday. So this is that sink, right? This is that dump the market did, right? So more opportunity for a buy. So guys, if you notice the market is very bullish, rocking to the upside. So any day you saw a bearish movement, that's an opportunity, guys, because that's a discount. That's a discount. So same thing, I'm still very much bullish on this instrument. So I would like to buy on the support, right? I would like to still do a buy on the support. Excuse me. I would like to still do a buy on the support. So we're actually going to also cover D30 and of course US 30. Okay, so just stay tuned. Okay, stay to the end. Remember, better is the end of a matter than the beginning thereof. So stay to the end. There is a lot of juice that you can extract at the end, guys. Of course, at the end, I will drop my number, okay, so that you can also reach me, guys. So I would like to do a buy anywhere on this level, right? So if gold should give us more retracement, let me drop down to 30 minutes time frame. If gold should give us more retracement, of course, retracement is healthy, right? It's healthy for the trend. So you can see gold is gradually rocking this local resistance. Of course, you can see the software is calling it verify resistance. So, of course, that resistance should push the price a little bit lower. So, lower to where? Lower to this level, right? So, either lower to this level or even fall much lower to this level. So, guys, anywhere on this level, sir, I would like to do a buy, right? So I would like to do a buy. Okay, that will be a buy limit. So that will be a buy limit on 1915.01 and of course 1910.34. So any of these two levels, I would like to do a buy 1915.01 and of course 1910.09. So anywhere here, I would like to do a buy because I'm still expecting more bullish movement. Stop loss will have to be below this low, guys. Below this low. Stop loss we have to be 1907.47, a very close tight stop loss. Of course, tape off we have to be at this high, right? Either this high or this other high. So this high is 1921.83, and of course this other high is 1929.91. So guys, so that will be it on gold. Now let me look at for questions. No. This is not instant buy. I'm not giving instant buy. It's not instant buy I gave, sir, on gold, okay? Because we are waiting for the price to come to an area of a higher demand on the local level, okay? So you are asking what is the correlation between war and oil and gold. First off, if the war is happening in the Middle East is known for their the quantity of oil they do produce, right? Or the quantity of oil they service your world with. Okay, so if there is a war in that area, of course, you know it will make that commodity to be scarce, right? To make that particular commodity to be scarce, and of course, if demand remains constant, of course, demand will remain the same, or even demand will increase. Then, of course, supply was drop. Guess what will happen to the price? Basic economics 101. The price will increase. So that means during crisis, especially in areas where they produce oil in large quantity, it will make that particular commodity to be scarce. And if the commodity is scarce, it means prices will increase. Supply will drop, price will increase. So that's the relationship, sir. Also on gold. Now, on gold, it doesn't have to be in area that produce gold like Australia. No, anywhere in the world now, investors all over the world will start running towards safe haven, right? So that means they will start withdrawing their funds from areas, from stocks, real estate areas where they can lose, where they will lose. And of course, they will start dumping on of us, start saving it in gold. So that means during crisis period, what we call uncertainties, right? Economic turmoil, like what happened between Russia and of course and Ukraine, right? So investors will run towards a safer place. So that's the answer there, Olubenga. I hope I was able to answer it just the way you want it. So you say I should repeat stop loss on gold. Very simple. I said stop loss will have to be here, right? Just below this low. Stop loss will have to be 1906.89, right? 190. I hope you're seeing the chart. If you're seeing the chart, you should be able to see what I'm doing, right? 1906.81. Then take profit at this high around this area 1922.86, or even this higher high because the market might want to take out this high during the course of the week, or even today 1929.30. Again, let's see the questions we have.
Oh dear. Yo.
So you say I'm a beginner. What kind of laptop would be recommended? Just buy any laptop that your budget can afford, right? Anyone, as long as it is 4 gig RAM, it will serve. Okay, it will serve. So you say, please, I need instant trade. Okay, so you're analyzing, once you say instant trade, you will also have it. Also, the account officer do send uh, signals also, okay? So you will get it, gospel. That's for you. All right, we are making progress. Now let's look at D30. Okay, it's already 9, but I'll still look at D30. Let's look at D30.
Okay, good morning.
So I also have another trade here on D30 because after that incident, we expected D30 to dump, and of course it did. It dumped very well, right? I have a trade here which I've been able to lock, right? So if you look carefully, this D30 is gradually giving us uh, range characteristics, right? So this is what we call a range. And of course, whenever there's a range, you should be expecting some springs. Those springs is what I call spikes, right? So this is a spring, right? So this is to grab all of the liquidity below this level. So this is the first sign that the market is about to go up, right? And of course, if you watch from here to all of these points, okay, I hope you guys can see my screen. Can you see my screen? Just type screen. Just type screen if you can see my screen. Just one or two, type screen if you can see my screen. Okay, fine, fine. Thank you. So after this week here, that week at all of this low, the price has not gotten to that area again. So it's just a range, guys. It's just a range. So you may want to enjoy the range while it lasts, right? So there might just be another movement to this upside, right? Then, of course, if the range continues, movement again to the downside until we now see a break out of the range. So on the H4 time frame, guys, it's very important for you to know that D30 has slide into a range. Now, inside this range, what can we do? We can see trade on a lower time frame, right? We can see trade on a lower time frame. So I will drop down to 30 minutes time frame. So we can see trade on this time frame, right? But my bias is strongly for a sell, right? My bias is strongly for a sell. So I will draw my feed, right? From, of course, from the high to the low. My bias is strongly for a sell. So once this price trade anywhere above my 50%, I would like to dump this market, guys. So I'll be looking out for sell signal inside this area, right? So if this market, if the price trade into this area, then I would like to do a sell around 15514.0 to 15433.0. So anywhere inside this range, sir, I would like to do a sell, right? 15 excuse me, 15514.0 to 15433.0. So anyway, inside here, I would like to do a sell. Of course, that sell, my stop loss will have to be just above this high here. And of course, inside that range, I've called it twice. So my take profit will have to be, remember this range here, right? So we can use that range. So let's just a bit closer to the range. 15258.3. 15258.3. So guys, I want to do a sell, but I need more premium price for the sell. So I would like to wait, right, for this instrument to trade much into this area before I will sell. But this price is already rocking a local resistance here, right? So two things may just happen. So this is a local, like not a strong resistance. That's what I mean. Okay. So, but I am hoping that it will break it. If it doesn't break it, then the market might start falling from here, right? But I don't want to take instant trade for now. I want to wait until this choice area. No, when it's very hard for you to be wrong following Fibonacci. Okay. All right, now that's for D30. Let's look at, okay, you have some questions here. You just type scalper site. What is scalper site? I don't understand what you mean. Just in case you're talking about the FinVis, it is www dot financial visuals finvis.com. Just in case this is what you're talking about. So this is it. Just in case that's what you're talking about. Okay. Now we have done D30. Let's look at US30. Then of course we can now call it a day. Excuse me. So guys, I hope you guys are getting value from this. All right, this will be like the last instrument to analyze, right? This is US 100, right? US 100, somebody has requested for it, US 100. So if you look at this instrument has reversed and start trading towards the upside, as you can see. So trading towards this upside is upward momentum, right? So this is impulse to the upside, right? What we call break of structure. And of course, it did a retracement to the downside. Now, it's always good you draw this on your screen, right? So that you can understand it better. This is a break of structure. Break of structure means it traded above this last high to form a new high. Then, of course, it retraced, right? Now, while retracing, it's not go below this low. So that means our bullish momentum is still very valid, right? And of course, it gave us another long bullish movement here, right? So that means we're expecting this move. We're expecting another bullish movement, right? That will trade much above this high, right? To continue the upward movement. But guess what? This is H4 time frame, so it doesn't just happen instantly, right? But we have seen this long bullish candlestick. So let me zoom into the area so that you can get enough value from this. We have seen this bullish candlestick, right? So this bullish candlestick with this one. So if you have to combine these two candlesticks together, remember this H4 time frame. If you have to combine these two candlesticks together, we call it bullish engulfing. That means the big bullish candlestick is far bigger than this bearish candlestick. So that alone is a bullish signal. And that is happening on the 50 period moving average. Okay, so this is already a bullish signal, guys. This is already a bullish signal. But guess what? After that bullish signal, you can see that the next candle that follows it is what we call a hammer, right? Well positioned, right? Well positioned. So now that also follows our Fibonacci, right? So because if you watch the market or the price actually traded into 50%, right? So if you watch now, it's also possible for you to draw Fibonacci on a particular candlestick, right? You can do that not only on ranges of candlestick, we can also draw it on a particular candlestick. So if you watch now, after that big bullish candlestick, the market retraced into 50% to gather more momentum, right? I hope you can see this. I don't know whether it's big enough. The market retraced into this area to gather more momentum. Then from there, it's pushing up. So we are seeing bullish signal. There's a confluence of bullish signal here, right? So we want to look out for this instrument to trade towards the upside. Now that's the information we are getting on the H4 time frame. So I'll just drop down to a lower time frame, then look out for buy signal. Then of course we can ride it, guys. We can ride it. So I've just dropped down to this time frame, right? So I can see the inefficiency here. So I'll just wait for the price to trade into this area that I would like to do a buy, guys. So if the price can trade into this area, I would like to do a buy, right? So you can buy here. You can also buy on this very verified supported. So these are the two areas you want to do a buy, because of course currently this market, this price is rocking a resistance, right? So you don't want to do anything at the resistance there. So you want to wait. You want to wait for US 100. Please, this analysis on US 100 also cover US 30, okay? Because there will not be time to do that. So if this price retraces into this area, sir, I would like to do a buy. So I will be buying at 15191. Let me say it again. 1591 15191.11 to 15213.43. So anywhere inside this area, I want to do a buy. So you want to set buy limits. You want to set buy limit here. You want to set buy limit here, right? You want to set buy limit here. 15191.11 to 15213.43. So anywhere inside you want to set a buy limit. And of course, if you do that, your stop loss, remember this is US 100, so you have to use you will need an account size that can actually trade US 100. Okay, if you have small funds in your account, you want to do a top up on your account. So stop loss we have to be just below this low, guys, below this low. Then of course take profit we have to be somewhere at this resistance. So your take profit will have to be 15325. 15325.88. Now for the surplus we have to be 15059.04. So guys, this is where we draw the curtain. Remember, this is Emmanuel Odogwu, right? And this and of course this is our money market review, 1 solid hour of money market analysis. Okay. Now, of course, I want to believe I've been able to arm you with tips and tricks on how to navigate the market. Let me drop my number 09026264507. Emmanuel. And of course, I know you have not forgotten this is e-trading. All right, everyone, thank you very much. You can still reach out to me on this number on WhatsApp, right? This number is on WhatsApp, or you can still call. I've dropped the number. Thank you, guys. Thank you, guys. All right, please try to join us again tomorrow for another exciting money market review. 8 a.m. is the time. Thank you, guys.